Thanks, Earl. Thanks for the panel here. I just want to just give a little bit ground rules about what we're going to be talking about here. The first thing, I think this is going to be an exciting panel. We're going to be talking about the fintech boom, and also with a really, really, really august panel here about how we think about regulation and making sure that regulation does not stifle innovation. So the first thing I'm going to do is introduce our panelists here, and then after that we have an expert that is going to just walk us from with background material about kind of the topic at hand. And after that, we'll have a 30 to 45-minute conversation with the panelists. It's going to be just a conversation about what people are seeing on the ground. And then the last 10 minutes, we will leave that to Q&A for the audience here. So I'll just go ahead and quickly make a quick introduction. My introduction is not going to do this panel justice, but we'll keep it simple, short, and quick. The first person on the panel is Dr. Patrick Njoroge. He's the governor of the Central Bank of Kenya. He's the ninth governor. He's been the governor since 2015. Before that, he had an illustrious career with the IMF, spending about 20 years there. The second panelist is Ms. Bola Adesola. She's the senior vice chairman of Standard Chartered Bank. Before that, she was executive MD of West Africa for Standard Chartered, and before that, she's had about 15 years of deep experience within the financial services sector in Africa. And then, last but not last, we have GB Wenga Agbola. He's the co-founder and CEO of Flutterwave. Flutterwave is one of the fastest growing fintech startups in Africa, and we'll let him talk about his experience. And he also has prior experience of exiting to tech startups in Africa as well. So it's a very, very good panel here for the conversation. But without much ado, I'll quickly introduce our expert. He's Zaid Lokil. He's the partner of at Mazars. He leads Africa and Middle East for the organization, and we'll let him just go through his presentation about kind of the fintech boom and regulation in Africa. Over to you, Zaid. Thanks.
Thank you, Wally, for your introduction. Hello to our distinguished speaker. Hello, everybody. It's a great pleasure to be with you today, and I'm really delighted to represent Mazars and our African banking team. We speak today about an exciting and complex topic, the fintech boom in Africa, regulating without stifling innovation. What is fintech? Fintech short for financial technology, which is the innovative use of technology to design and deliver financial services and products. I will share with you today some key ideas on the fintech landscape in Africa, how fintech is changing the financial services market, its positive impacts, the future of fintech, and how to find the right regulatory fit to foster its development. I will start by giving you an overview of the fintech ecosystem in Africa. The African startup ecosystem is booming and growing fast with the growing interest from foreign investors and remains driven by fintech. According to Partech 2020 Africa Tech VC report, fintech fundraising represented around 25% of total African funding raised last year. Funding remains concentrated in few markets. South Africa, Kenya, Nigeria, and Egypt are considered today as the emerging 4 fintech hubs at continent level. These 4 countries concentrated around 80% of fundraising in 2020. This is notably the result of a supportive regulatory environment and the local market context. Other African countries are also catching up. Ghana is one of the emerging countries in the sector, followed by the Ivory Coast and Senegal in West Africa, where governments are showing a strong commitment to fintech's development. In North Africa, especially in Morocco and Tunisia, despite some encouraging initiatives, regulation remains restrictive and does not allow fintechs to develop easily. Over the last decade, Africa has become a global leader in mobile financial services. The best success story to mention here is, of course, M-Pesa in Kenya. This rapid development of the mobile financial service in Africa is mainly due to the large proportion of M-banking population, the high mobile and internet penetration, and also to a young and tech-friendly population. Considering this context, it's quite clear today that fintech have a great growth potential in Africa. Today, fintech and mobile finance are playing a crucial role in terms of financial inclusion with significant economic and social impacts across the continent. Fintech is transforming the banking world and business models. More and more strategic partnerships have emerged in recent years between traditional bankers, mobile operators, and fintechs, which provides a competitive advantage in a changing and disruptive context. Fintechs in Africa provide innovative services to the user, and their role was crucial during the COVID-19 crisis for populations. Next slide, please. After this global overview, I will give you an update on the fintech's development in Africa and their future prospects. The fintech is developing rapidly in Africa. The playing field for fintechs is quite vast in Africa, as they are mainly targeting unbanked population not served by traditional banker and financial sector. The service offering on fintechs in Africa has evolved over the last few years, starting with basic mass market services like mobile payment, for example, progressing to more developed services such as small personal loans, crowdfunding, and insurance solutions. And today, we are observing high added value services using data analytics, artificial intelligence, such as credit scoring, KYC, AML solution, and of course, blockchain and cryptocurrency, with several African-born crypto players. The evolution of the regulatory environment will be crucial for further development and access to these innovative services. These new technologies clearly present opportunities, but also new risks in areas that are usually strictly regulated. Africa and all stakeholders must benefit as much as possible from the substantial economic and social impact of fintech in a controlled and sustainable manner. Next slide, please. So now, if we take a look at the situation today, we can say that a lot of progress has been made, but a lot remains to be done. On the one hand, we see visible and positive progress and developments. Several progresses have taken place in the fintech landscape over the last years. The considerable economic and social impact, notably through access to financial services such as payments, loans, and crowdfunding for unbanked populations. Fintech has promoted diversity and access to financial services for women, a disruptive impact through technological innovation, more accessible financial services focused on customer needs, challenging traditional business models, and pushing banks and financial players to change and to move forward. Several strategic partnerships have been concluded between bank, telco operators, and fintechs, confirming the existing of synergies between business models and the common interest to work together. We also noticed significant financial and technical support from DFIs to set up joint programs with government policymakers to foster the development of fintech in Africa. But on the other hand, several obstacles still remain and are currently slowing a greater emergence of fintech and its positive impacts. In many African countries, regulation has not yet evolved enough to integrate specificities of fintech. This is reflected in the entry barriers to some activities or in a heavy regulatory framework specific to banks and not adapted to fintechs. We can also mention the need for greater cooperation at regional and continental level, limited interoperability at the continental level, but also with the rest of the world, which is a limitation for mobile payment and international money transfers from the African diaspora. Technological complexity, which may lead to resistance or aversion to change from regulator, and the need to strengthen the technical and educational infrastructure related to new technologies and fintechs. Next slide, please. So the most important question today to be addressed is what kind of regulation is needed to make fintech a driving force for growth in Africa? The regulation of fintech in Africa is quite complex and strategic, with medium and long-term impacts covering several aspects with political, sectorial, commercial, technical, cultural, economic, and social dimensions. We do not have a miraculous answer or solution to this question. However, we have noted some ideas and guidance to initiate discussion with our distinguished speaker, such as supporting fintechs and ensuring their smooth integration into the financial ecosystem, modernization of the legal and regulatory framework, and consideration of the fintech context, creating a rich and diversified and innovative financial ecosystems in terms of player and offered services, ensuring risk management and implementation of effective and adapted supervision, promotion of regional and international cooperation with various regulators and policymakers, leveraging fintech's contribution for the benefit of public policies and regulation, and finally, set up an adequate educational and technical infrastructure to take full advantage of the opportunities offered by new technologies and fintechs. Thank you very much for your attention, and I give you the floor, Wally, to moderate the debate. Thank you.
Thanks, I really appreciate that. And this is a great panel because on the panel we have a regulator, which is the Central Bank of Kenya. We have a commercial bank, a Standard Chartered, and then we have a fintech. So I think this is kind of conversation that needs to happen a lot more often. But Patrick, we're not going to put you on kind of the spotlight right away because I think there's going to be a bunch of questions that are going to come to the regulators. But I'd like to take a step back here and actually address the first question to Flutterwave and GB. And first of all, GB, congrats on your Series C round. It is kind of one of the biggest investment round this year in fintech in Africa. So big kudos to you and your team. But if we step back a little bit here, in your own words, people talk about the fintech boom in Africa. What actually is the fintech boom in Africa? What's the opportunity that you guys are seeing on the ground, and what's the opportunity you guys are actually chasing? Thanks.
Thanks so much, Wale. So when you say fintech boom, for me, I will call it the boom has been happening for a long time, right? And in my own world, the boom started with M-Pesa in Kenya, with the favorable regulation of the CBK in Kenya, for example, that allowed M-Pesa to grow. For me, M-Pesa is the biggest innovation when it comes to payments in Africa. It's a shining light for everyone. And that was the driving force, for example, behind Flutterwave around how do we connect this amazing payment type to other parts of Africa or the world, right? For example, how do we make sure that, Africa does not just exist in isolation? There are corridors Africa plugs to, like China, like the UK, the US, etc. How do we make our payment system global, right? So what I call the fintech boom is just what I call the awakening of the ecosystem to the fact that why would I do a wire transfer from Kenya to Nigeria, and it might take a day or two because that money has to go from Nairobi to New York to Lagos, right? Why? M-Pesa today is real time in Kenya. I can do a transfer of my M-Pesa to my friend or to my mother and get the money instantly. If I do a wire transfer from my Kenya bank to a bank in Nigeria, it is, if I'm lucky, it's probably the same day or next day. So that tells you that the innovation in Africa, right, are actually way advanced of everywhere else in the world. However, we don't tout those values we've created. And that for me is what I call the beginning of the boom. So the boom is people like us, realizing that Africa has this amazing product. M-Pesa is fantastic. It works well. It's up almost all the time. There's almost no downtime. It works for commerce, for P2P, for all kinds of payments. How do we leverage M-Pesa for a small business in Lagos or in Joburg who is selling to somebody in Kenya? So the person in Kenya who has M-Pesa can pay that small merchant in Joburg via M-Pesa. When before now, what will have happened is that seller in Joburg in South Africa will send an invoice to that customer in Kenya, and they have to do a wire transfer to make it work. So that, for me, is the beginning of the boom. The boom really is about leveraging Africa's payment infrastructure and building a layer on that and making it easy for small businesses, large enterprises, global merchants to appreciate the value of what we've built in Africa and use that to drive our trade and our growth. Thank you.
Yeah, thanks. That's a great answer because people don't realize in the US at least ACH is still 3 days. In a lot of African countries, within those countries, transfers are actually real time. So there's a lot of innovation that is in Africa that I feel, I agree with you, could be expanded. But I'm going to switch gears here to Paula and ask her, given the fintech boom, how are commercial banks looking at the fintech boom? Kind of what's your perspective of kind of this new fintech opportunity, concerns, risk, opportunity? Kind of how do you guys look at it from kind of a commercial bank lens? Thanks, Paula.
Thank you very much, Wale. Well, I would say first of all that in the early days, commercial banks viewed, fintech platforms as a threat and didn't really understand. If you look at the way commercial banks are structured, I mean, basically, payments, deposits, savings, and loans. And with the amount of regulation that goes on, they have not been able to innovate as fast. A lot of the efficiencies that commercial banks are looking at are efficiencies within the framework that they operate. And of course, then you have, the GBs and so on of this world who are maybe slightly outside that system. And what they're looking for are what are the problems people are going through and how can solutions be provided, both for the consumer and also at the end of the day for the commercial bank. So I think these days commercial banks are actually embracing fintech. They're looking at how they can partner with fintech. Fintechs themselves also need the banks in some way, even though they started off disintermediating, but they also need the banks because of scale. And so we're seeing more and more of partnerships in this area. If I look at Standard Chartered, for example, because we could not innovate fast enough within the structure of the bank, we set up a unit called SC Ventures, which is slightly outside. And what SC Ventures does is scouts around for fintech opportunities that we can partner with that will help us become more efficient and service our clients. And so we've embraced it. We actually have a hub in Nairobi that is also scouting around, and we've done, collaborations, joint ventures, partnerships on, blockchain that's delivering custody services, for example, for crypto and so on and so forth. Many examples. So I think right now, banks are also looking at intrapreneurship within their organizations to see how they can develop fintech platforms. One of the challenges banks have also had is the extensive and elaborate technology systems that are, that support banking. To add a new product that is maybe fintech based can be quite expensive. And oftentimes, the cost benefit does not really warrant it. But now with fintechs and APIs that you can plug and play, it's really the banks are riding that new wave of fintech technology for efficiency for their clients, whether it's credit or payment systems, even bank assurance and so on. So it's a new era that really brings a lot of promise for us as commercial banks and for our clients as well.
Thanks. I mean, it's good to see innovation both outside of kind of commercial banks with the fintechs, but also what you call entrepreneurship within commercial banks to really, really catch up and be quite innovative as well. And then I'll turn it to you, Patrick, here. Given all that is going on, one side, commercial banks have been around, they work within a regulatory framework for a while. The fintechs are coming in, and how do you guys in the central bank, and I'm not sure it's an easy kind of decision to make. How do you all think about regulation and what to regulate, what not to regulate, how to encourage innovation without, destroying what has already been built? So just give you the floor here, Patrick, to just talk about kind of your framework and how you guys are using to analyze all of this.
Thank you, Ali, and thank you for having me in this panel. And it's great to be with Bola and, of course, Flutterwave, etc. So thank you very much. In terms of your question, I think really to build on what the others have said before me, and I think the first point to make is that we don't see that very strong dilemma that is often put forward, and I think your question may betray of innovation versus regulation, that we may be stifling innovation in some way. If we think of it correctly, then we wouldn't be stifling innovation. I think that is the first dilemma that I want to talk about. Basically, we as regulators have, let's say, a responsibility that we need to discharge. And it involves, for instance, consumer protection, protection of depositors, funds, financial stability, etc. Those are, let's say, the outcomes that we want to maintain. There are also others, but those are the fundamental outcomes. So when the innovator comes around with a product like M-Pesa, as was mentioned earlier, our concern is shouldn't be so much trying to figure out whether this is a good business decision or not. Of course, we worry about business decisions, but that is not really the fundamental thing. Or worrying whether it's written in this program or this code, etc., etc. Those are not the issues that should interest us as regulators. So what we do is we appreciate the business model and also the ecosystem and the risks and mitigants that this product or let's say the particular innovation brings forth. So we therefore, as particularly here in the Central Bank of Kenya, we adopt this very proactive approach, right? And so we look at the model, the business model that is presented to us, and then ask ourselves whether it is fit for purpose, meaning is it doing what it is meant to do, and those risks, how are they taken care of? And that's really the crux of our regulation. So we will regulate it and regulate similar services in similar ways. And I think this is one of the things that maybe supported what Bali just now mentioned, this sort of symbiosis or partnerships between banks and fintechs. I mean, in the past, the concern was that the brick and mortar model is falling apart and is being disrupted by, fast moving fintechs. But the point is, you still have a consumer on the other side, and the consumer needs to be protected no matter what, the business model, if it is a bank or fintech. So in that sense, it has to be regulated similarly. Now that means, of course, as I say, it's proportionate. That doesn't mean that that fintech should have the same capital requirements. Obviously, as they expand, they will obviously require to be more solid in terms of financial support, et cetera, et cetera. But I think the point here is to really look about similar risk profiles should be regulated the same way. We have actually come a long way in this. And I think also there has been, and I'll finish with this by saying that we have worked with several fintechs. They come to us with a particular idea, a particular business model. And then we ask them, we push them through their paces and ask them, okay, how does this risk manifest itself in your system and all that? And they'll scratch their heads and go and come back with a better model, because in a sense, they are innovators and they may not have gone through the, let's say, the sort of list of all the risks. And therefore, by asking them a lot more of those questions, I think they come up with a better product, and the financial system and customers are thereby protected.
Thanks for that. That was a very elaborate answer. I really liked it. The two things I heard was, the first thing is really around consumer protection. So no matter what the service is, whether it's commercial bank or fintechs, consumer protection is kind of front and foremost, kind of from the regulator's perspective. But the other thing I also had, which was quite encouraging, is that you have an open door policy, which you actually engage with fintechs. Not a bunch of regulators do that, so that there could be an exchange of ideas back and forth. But if we stay with you, Patrick, just one other question, just given what GB has said from Flutterwave. M-Pesa is kind of one of the poster childs of kind of fintechs and a success story that has been written about multiple times. If you have the advantage of hindsight now, and the context that M-Pesa has been quite successful in Kenya, but it's not, other countries have had, disparate success in trying to replicate M-Pesa. So what would you say you guys got right in kind of that M-Pesa in the early days when it wasn't sure it was going to be a success story? And what would you potentially will change given that history with what you know now? What went back? Will be good to hear from your perspective.
Thank you, Ari. And as GB mentioned, yes, Kenya is really the cradle of fintech with M-Pesa. Of course, before fintech was invented in that sense, the term fintech, but we can always split and see where it came from. But so yes, the first thing is we have to appreciate that there was no model to follow. So there was no one else that you could have followed the tracks, like you're driving behind somebody else and following him. So there wasn't. So in a sense, everything was an ad novum, new. And I think the most important thing was to appreciate that this product could actually improve on financial inclusion. And really, it would have a significant positive effect on society. And the reason here is that you distinguished or you differentiated the transaction, where you could have the transaction happening in other places that were not bank within bank sort of walls, the brick and mortar, et cetera, et cetera. So there was a need, and there was definitely a significant positive effect. As a matter of fact, we have improved our financial inclusion numbers from 26% in 2007 all the way to now 83 plus in 2019. That sort of leap, I think, in any standard is actually phenomenal. And actually, other countries have also benefited in this way by using similar products and M-Pesa, etc. So the idea of appreciating that there is actually a positive need, and therefore we needed to go to it. Secondly, that was a good point. Secondly, appreciating that there are risks. And so we actually tested this thing, or we talked about it for about a year and a half. They didn't just show up and then we kind of said, okay, it looks really good, let's go ahead with it. It took about a year and a half to actually improve the product. And so the final product that was launched, it was actually much better because we mitigated the various risks in particular ways, etc. Now, at the same time, there was a sense of a test and learn. We knew that we couldn't remove all risk or mitigate all risk. So there was a sense that, okay, let's start it on a pilot, and this was the test and learn. And if things go south, if things really go, you pull it off the wall, so you unplug it. So there's that sense. So in a sense, a very innovative regulator. The innovator themselves also were willing to learn. So when they came to us, they didn't have all this appreciation. So these are all very positive things. I should also say a major positive element in all this was the population was also quite, let's say, tech savvy. Meaning, now we look at them and we believe that they are not, this is definitely not the advanced economy. So you think that they are not, so they cannot learn technology quickly, etc. That is completely untrue. I mean, my 8-year-old aunt, 10 years ago, she taught me about arbitrage, and I'm an economist. Arbitrage on pricing of products, etc., etc. So they are much more sophisticated than maybe we may grant them at the beginning. What are the things we could have done better with the benefit of hindsight? I think first and foremost is to maintain an open position with regard to interoperability. Remember, this was the first item. So there was no, it was interoperable by definition. But the idea of ensuring that, let's say, that idea remains in the minds of the innovators, that if a second one comes, they need to have a platform that, etc. I think that is one of the things that we could do differently. And then, of course, making sure that there are connections with other parts of the financial sector. Maybe now, for instance, they are working with banks, etc. So the thing that Bolas said at the beginning, that banks and fintechs were sort of like cats and dogs at the beginning. And then eventually they realized, hey, we can cooperate. So I think we lost some time in this sort of cat and dog sort of fight. And they should have cooperated earlier. Thank you.
Thanks for that. I think I'll play a quick lightning round now, and given Patrick, you've been speaking for a while, I'll make sure you have enough time to prepare the answer for this one. The one thing we want to do is put everybody in the other person's box and then ask the question, what are they doing right and what could they do better? So for Patrick, your question is going to be, imagine you're a fintech founder, what a fintech is doing properly and what they're not doing well. So that's kind of going to be yours. But I'll start with Baller and ask you a question really around regulators, and not just in Kenya but just globally. Imagine you're a regulator, and obviously you know what you know from a commercial banking side. Where are regulators getting it right, and then where are regulators not getting it right that could be improved on? And then GB, after Bola, yours is going to be, imagine you are CEO of a commercial bank with your fintech hat. What are commercial banks doing right and what are not? What could they improve on? But I'll let Bola start.
Thank you very much, Wally. I think the first part of the question, what are regulators doing right? I think, Patrick has enumerated what, the central bank in Kenya has done over the years to support all the way from M-Pesa to, current fintech platforms, and also the lessons learned, because it's a road that hadn't been walked before by regulators. So I think for many central banks, and there are, of course, multiple regulators when it comes to fintech. So, for example, the SEC in Nigeria, has some framework around, fintechs as well. I think not having walked the road before, they're learning as they go along. I think what we could do more of, as opposed to what regulators have done wrongly, is engage earlier, have maybe more frequent focus session groups with existing fintechs and aspiring fintechs as well. Provide the enabling environment to be able to test the system, support them with risk management and let them understand the impact of if anything goes wrong with a technology platform that supports the banking system, how it could actually affect the banking system. So whether it's risk management in terms of KYC where necessary, whether it's risk management in terms of cyber and so on, so that there's a proactive stance as opposed to what used to be a hostility towards fintechs. I mean, we've had a couple of situations recently in Nigeria where, for example, banks are not allowed to process cryptocurrency transactions, and then somehow you find some of these policies being unwound gradually when it's realized that that's not what to target. It's better to. This is my objective. What do we want to achieve as regulators here? Who are we protecting? And then work with the fintechs and, of course, the commercial banks to ensure that the objective that preserves the stability of the market is what is being targeted by the regulators. But I must say that, I would commend most of and I sit on, a few of our boards across Africa, I would commend most of the central banks for now embracing fintech, supporting them, creating sandboxes as well where, some of these can be tested and lessons learned, in the early stages, because anybody who ignores revolution really would have, a lot to lose. So that's what I would say.
Thanks, Bola. That was quite helpful. And then, GB, if you were in Bola's seat as vice chairman of a big commercial bank in Africa, how would you think about the fintech opportunity, capturing it, and how would you really think about regulation as well?
Thank you so much, Wale. So the way I see it, the banks have a massive opportunity here to really capture value, right, and do what they do best. Fintech at best, we're extremely transactional in nature, right? Unlike banks who can play a very long game on a particular sector of banking. And banking is different from transactional. While it's a part of it, there's a massive piece that we don't do in fintech yet. So I think as a fintech, one bank that I find very interesting is a bank in New York City that partners with almost every of the big tech companies from Google to Amazon. They are behind the Amazon card, the Google card. and that bank has issued over 20 to 30 million cards without actually having the infrastructure to issue one, right? And that for me is an example of how banks can partner and scale. But beyond that, I think fintechs require banks. We don't hold value. Banks hold the value. So there will always be a need to ensure that the banks give value and with a platform to scale. Obviously, support fintech from a risk perspective as well, because fintech sometimes, like and the governor mentioned, fintechs we are more on innovating side, less on the risk side, right? So support fintechs on the minor areas where fintechs is obviously majoring in, and then use that to drive value.
Thanks. And then, Patrick, if you were the if you were the founder, I hope you don't say you're going to start an arbitrage fintech company. but if you were a fintech founder, what will your advice be on fintechs working more with commercial banks and regulators? What they're doing well and what they're not doing quite well?
Thank you very much. Arbitrage, I'll leave for later. But I've learned a lot from the people here, meaning people who are customers, etc. But in terms of the things, I think fintech or fintechs in general, there are several things they are doing well, and those need to be played up. First, these are people who are grabbing the opportunities that are there, meaning, in the olden days, you would think of that is only done by entrepreneurs that have gone to MBA and things like that. No, these are people who are maybe 23. People like GB who they only started this thing in just 2016 or something like that. I mean, 6 years is nothing compared to institutions like Stanchart, etc. So in some sense, that courage should be flagged. And I think we should tip our hats to people who have that level of courage, to jump out there and deal with it. That's one thing. Secondly, of course, they are smarts. They see the opportunity from a point of view of technology. Technology really is going to change things dramatically, a bit like electricity in the past, et cetera, et cetera. I mean, we could have an entire conversation about technology, et cetera. But I think the point I'm making here is it is a tool to something, and they have learned how to use that tool and applying it in particular ways. Now, one of the things they're doing, of course, is taking care of, let's say, cutting the costs that are there in the financial transactions, etc. I should add quickly that fintech are not only in the area of payments, which is where a lot of our fintechs are concentrated. As a matter of fact, from our perspective here in Kenya, we think of ourselves having built the rails, and now we have to put on the wagons, meaning it's an ecosystem that we are in, and fintechs need to appreciate that they're in an ecosystem, not just a linear one-track kind of payments thing, etc. So again, they need to be a bit more open to talking to other people. I mean, Flutterwave is in the payment space, but they need to be talking to other people in insurance, et cetera, et cetera. And I think that openness, which banks actually generally have, I think that is an openness that they need to have. A couple of other things that I would want to flag. They should focus on the question, on the consumer. What problem are they resolving for the consumer? So it shouldn't be discussions of only, the technology that they are using. Are they using X to code or whatever other things it is? All those other questions, they are good at a tech conference and all those other things, but they are probably not the issue that we should be focusing on. And then, of course, for instance, we hear so much about blockchain, right? Blockchain this, blockchain that, blockchain this. I have no problem with blockchain, but what problem are you resolving? It's like writing something in English. I have no problem with English, but what letter are you writing to me? You're trying to communicate something. So that is, then finally, so what is it that you're resolving? Is an important point. Finally, don't worry about funding. And I'm not looking in particular to anybody, but I mean, yeah, it is good that the companies grow and people, in a sense, vote with their wallet, meaning providing you funding, etc. But remember, even our friends I mean, think about Apple, for instance, when it was the quintessential startup, they couldn't pay taxes in their town, right? I mean, there was a point when they actually had to have negotiations with the town council. So I think the point is maybe we get too excited about the funding thing. And I think the issue here is to look at things more long term. So let's not look at the next 2 years. I mean, are we in this for the long haul? And that's a big issue for us regulators. I mean, when a fintech comes to us or any other company, are they here for the long haul or are they here to make a quick buck and then move? So I think those are issues that I want to, if I was a fintech person, I would need to think a little more about. Thank you.
Yeah, thanks, Patrick. That was quite important, and particularly your point about long term, kind of as investors, and I'm part of the IFC's investing team. We always talk about kind of long term value creation, and it's really about companies that can be there 100 years from now. And that's kind of the yardstick, and that takes a kind of fundamental way of thinking about kind of what you're building and how to create a platform that is sustainable in the long term. But just to be very cognizant and do a time check, we have about 15 more minutes, so we're going to do Q&A for the last 10 minutes. So for the last 5 to 6 minutes here, I just want to maybe go to a different stream and just talk about the innovation coming our way that we're seeing it. I think 2 people have mentioned blockchain or crypto in this conversation. The only person that hasn't mentioned it is the fintech, but Bola has mentioned it, and Patrick, you've mentioned it as well. So it'll be good to get an idea about kind of what are people's views really about 2 important topics that I think is really driving a lot of future innovation in financial services. One is kind of your views really around crypto and blockchain. And then the second part of the question is also your views about new banks and challenger banks. Examples would be new bank in Brazil, N26, Chime, and there's a bunch of these things around that are calling themselves challenger banks. So it'll be good to get kind of your views on it. But maybe with Bola, I'll start with crypto and kind of your views on blockchain as well.
Thank you very much, Wally. Well, I mean, the bottom line is there's no denying the fact that crypto is here to stay. Whether it goes up, whether it comes down, it has become a significant industry, an industry that is the sort of crypto ecosystem, which I mean, like I said, we are ourselves investing in. Similarly with blockchain, we've also partnered with, for example, the Ant group in Asia to come up with a blockchain-based platform to facilitate tracking and monitoring of trade transactions. So we're solving problems using these technologies. And I think that, for most sort of forward-looking banks, it's actually better to be ahead of the curve in providing the platform and the services before the clients ask for it. So that's what we're doing. Like I said, a lot of this is, for us in Standard Chartered Bank about, innovation and entrepreneurship. So it's here to stay. There's no denying that. But of course, regulations around it are very important so that people actually know what they're letting themselves in for. The regulators need to help create the awareness, the information as well, so that people make informed choices in whether it's a consumer who is investing in a cryptocurrency, for example, or whether it's also a platform that is providing cryptocurrency services. In terms of challenger banks, the way I look at it is that there's red ocean, so there's existing competition. There's blue ocean, the market space that's wide, out there, because of the gap in financial inclusion, there cannot be there can't be a surfeit now of financial services provision. So for us, it's when they're challengers, how can we partner with them? For example, one of our products under SC Ventures is called Nexus, it's banking as a service. And so we're looking at how can we be the back end for whether it's an e-commerce business or a telecoms business. And so again, it's really about, for us as a commercial bank, working is partnerships, working with stakeholders, whether it's regulators, the fintech companies, consumers, innovators, to ensure that whatever we do is customer centric. How are we helping the customer today, and how are we anticipating the customer's needs in future? So I would, we encourage, our clients, our stakeholders, to embrace these new technologies, and we're working with them to help deliver.
Thanks, Bobola. And then Patrick, same question to you, just really around blockchain. I think that you've heard one of your customers, Standard Chartered, talk about their views on it. It'll be good to get your own views on it.
Thank you. Thank you very much. I think we regulate Standard Chartered, so it's not so much a customer. I'm very conscious of my job. But yeah, thank you for the question. You see, I think we have to appreciate a couple of things. First, as I said in my earlier remarks, what problem are you resolving? And unfortunately, for some time now, blockchain was the solution for everything. So you have this problem, blockchain will solve that. Blah, 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 blockchain will solve that. I think we have now sort of gotten to the point of, okay, show me the solution, show me the money, as it were, right, in a manner of speaking. And I think there are people that are doing that. There was, for instance, it's a pretty good solution, at least theoretically, this thing of land titles, et cetera, particularly thinking of what happens in many of our countries in Africa, where you have, actual pieces of paper, filed somewhere, which could burn up, one night or whatever else it is. So I think the issue is move from, let's say, ideas to actual solution, build them. And this is where I think the innovators come in. In terms of crypto, I think here is where, again, crypto was, particularly Bitcoin at the beginning, was supposed to solve our problems. It was going to be the archetype, or should we say this, the solution to our payments issues that we have. Our payments have been with us for a long time. By the way, there's a very interesting article which you should all read. It's by Milton Friedman. It's called the Age of Stone Money or something like that. It's a long story, but a very short story, actually, 2 pages or so. But it's about the people in Micronesia that were transacting with this in the island of Yap, that had these stones that they were using for their transaction. Anyway, the point I would want to make is cryptocurrency or Bitcoin and all that, clearly they are not efficient in terms of payments, or for that matter, stores of value, because they are very elastic, as we have discovered. We can now agree, I think, that they are more speculative investments. So if you think of speculative investment, that's fine. Then, and if, as Bill Gates said recently, if you are Elon Musk and so you have so much disposable income and you want to throw your money into this speculative investment, you can gain something, you can lose something. Well, that's your game. That's a casino in a sense. So I think on crypto, in that sense, we need to appreciate what it is, which is more a speculative investment. But is this the only thing? Of course not. I think there is a lot of other things that are coming up. In our area, of course, there's a lot of discussion about central bank digital currency. And that is not obviously aligned in every way with the crypto, but it's a specific idea that has some attraction. As a matter of fact, the first country to create the CBDCs is Bahamas, so-called sand dollars last year, end of last year. But I think the point here is it also has some issues, some problems, which we need to resolve. So it isn't, to begin with, it's not a solution for everything, but I think the requirement here are actually a rather high bar that we have to set in order to use CBDCs appropriately. And I think, not only in the sense of, needed infrastructure, you have to have ubiquitous ubiquitous connections, secure, reliable, etc. And also you have the issue of the positive benefits, which are lowering costs, greater efficiencies. But on the other hand, you do have some problems that you have to deal with. And for instance, you may end up actually selecting out some people and therefore leading to some sort of reducing the financial inclusion. So pushing some people out of the financial system, etc. So those are all things that we need to worry about. I am more into the middle of the road CBDCs that would look more, that would really look like M-Pesa and other things like that, because it is related in some ways to fiat currency, and you can also cash out when needed. So, but I think the point is we are on this journey, and our biggest problem today is not any of those things. Our biggest problem today is thinking as regulators, as policymakers, is thinking about the post-COVID recovery. That is the biggest problem, or the biggest question that we have to deal with. So I'd rather focus on that or push all my energy in that area, and the others will come up as we work with other regulators and indeed other central banks around the world.
Thanks, Patrick. It's good to know that at least there's engagement and trying to understand kind of what the pros and cons in around crypto. Just given time, GB, same question to you, but I'll also add one more question that an audience person gave, and which is kind of what is the thinking in relationship to managing the risk of fintechs being used to facilitate illicit flows? So talk about the crypto opportunity, blockchain, new bank opportunity, and then the audience question, because about kind of the perception that's just a fintech issue.
Thanks so much. I'm gonna basically toe the line of the governor when he mentioned around, when you're communicating, there must be a message what you're writing down, right? We can't just do blockchain for blockchain's sake, right? What value are we creating? What is the attendant value being created? What efficiency are we trying to drive? And that's also my take on blockchain. There must be a goal at the end of the blockchain conversation, not just for blockchain reasons. That's very important. When it comes to crypto, I think that sometimes the speculative nature of crypto will always be a problem, right? I don't see crypto getting to a point whereby it becomes a means of transaction day to day, right? I don't think it's ever get there. Maybe the current the people understand that money isn't really money unless it's backed by the power of a central bank, right? And the sovereignty of a nation that creates value to make currency. And legal tenders are basically designed that way for a reason, right? And when you have a currency or a cryptocurrency that is being mined by a few people, and that value is being held and there's no collective way, you've basically said, we've handed the central bank powers to a few people who can only mine and hold the crypto, right? That's what we're basically doing. And there's a collective impact of that as well across board. So I think there is not a lot of education, in-depth education, for people to understand really how these things work, and hence why the public, obviously, without required education, will flock to whatever they see value, right? And and that's my take on that. That said, I think that there's also an opportunity there for innovation, where the right framework in place, the right regulation in place to take away the speculation around cryptocurrency and harness the value of what you can use blockchain to do, for example, for settlement, for cross-bank transactions, that, I guess, with the right framework, with the right risk appetite in place, can create value for all parties involved. Regarding fintech for using for illicit flows and all of that, the risk, I think it's the same with banks as well, right? I think, but obviously, because fintechs are very light, it may be manpower and all of that, there's a perception that fintechs have bigger risk than banks will. But I think if we look at the quantity of fraud being perpetrated across platforms, I think you will discover that actually fintech is the least, globally. But that said, I think there's opportunity here for collaboration where banks and fintechs can work together because fintechs do not have the advantage of seeing the history of a customer's transaction. The banks have that advantage. With that collaboration in place, there can be adequate risk management built across board that will solve this problem. And that speaks to what the governor earlier said around fintech should not just operate in silos, right? We need to collaborate and collaborate on risk as well, collaborate with banks on, transaction monitoring, putting the right systems in place to detect such when they happen, even before they happen, and use the technology expertise that fintech brings to the table to build predictive fraud modelings, right? To be able to understand where a fraud might occur or will occur, depending on the transaction type in question.
Thanks. Just given that we have about 1 minute, about 2 minutes left, I'll just have a final question, and there's a question from the audience as well. GB, I'm going to ask you the question last, just because I think you're conflicted. When you hear the question, you understand, so we'll give you time to think about it. But the question is really outside of payments industry, what other fintechs are booming in Africa? So what's the other opportunity out there that big problems to be solved, outside of payments per se? And I know Patrick was talking about it initially as well. So but I'll let Bola start, then Patrick will chime in. Then GB, you can just end the panel with your thoughts on that. So Bola, up to you.
Thank you very much. I would say that platforms that support lending services. So, likes of a relatively new fintech platform like Okra, which is similar to Plaid, where banks are able to go into customers' accounts and facilitate credit decisions. So fintechs that drive lending, consumer lending practices, I think are going to do well in the near future.
Thanks.
Okay, thank you. I think there first, of course, payments. As I say, those are the rails. Next, actually, that we have seen booming, but in a sense, has had significant social impact is lending, micro lending. This is particularly to SMEs. And that is an area that obviously requires to be looked at very carefully because you can have all sorts of other problems. But I think that is one that also has significant impact, particularly women, etc. So it is lifting a lot of families. Thirdly, the area of insurance, micro insurance. And here we are talking things like, think of insurance for 3 days, so you have no income for 3 days. And think of your street seller, the vegetable seller at the street. She cannot afford to be away because, when she's sick or when her child is sick. But if she had micro insurance, that would be significant in terms of improving her life, etc. And third, and finally, a big one, which is savings. So savings vehicle. And here we are talking even savings, sort of the equivalent of $1 a day. In a sense, what we are seeing is what we want to see is a democratization of financial services. So generally, so bringing it down to every single person. Savings of $1 a day. That means you could have somebody who is earning, let's say, $5 a day. And that is very much, the cusp, let's put it that way, of poverty. And they are able to save in a particular product. And I think fintech would really do that really well. Thank you.
Thanks, Patrick. Really appreciate it. We're at the end of the panel now. So GB, just one sentence. You cannot say lending, microinsurance, or savings. So nor can you say payments. So what's kind of the next boom in kind of fintech, and you can help us end the panel on that.
Invest tech.
Invest tech. Okay.
There are a lot of companies today who are becoming the Robin Hood of Africa, like the likes of Invest Bamboo, the likes of Rice Vest, Piggy Vest, Cowrywise. These companies are basically trying to make it easy for Africans to invest in African stock market, also invest in global stock market as well, all the way from Africa. And that I think is the next frontier. The last 1 year, we've seen them come from nowhere and they've grown. They made it easy for Africans to invest in Amazon in the US, or some are working with local markets here to invest in the Kenya Stock Exchange, the Nigerian Stock Exchange, and I think that would be fantastic. That is a very big one. Yeah.
Thanks. On that note, I hope that we encourage them to first invest in the African stock exchanges before they invest outside. But I want to say a big thank you to the august panelists here. I think this conversation was very, very opportune, and I learned a lot. So I hope the audience learned as well. So thanks a lot for your time here. Thank you.
Thank you. Thank you.
Thank you. Thank you very much.